Infosys ADR just exploded 40% in one day, and most investors have no clue why this happened. The villain: shorts betting against Infosys, assuming the stock would fall. They thought the move was guaranteed. But they didn't count on one thing: retail investors striking back. The hero? Smart investors, like you, who can spot a short squeeze before the headlines even break. Most people didn't notice this spike. Imagine checking your portfolio and realizing the stock shot up 40% before lunch. Thousands in missed gains for the unaware. That's real money lost in hours. Here's how it works. A short seller borrows shares, hoping to sell high and buy back low. But when the stock suddenly jumps, panic sets in. They scramble to cover, creating massive buying pressure, and that's exactly what happened with Infosys ADR. But that's not even the full story. This isn't just about one day. It reveals how market mechanics can suddenly flip, and why knowledge matters more than luck. If you trade ADRs, tech stocks, or are learning market patterns, this is your wake-up call. You have to recognize these squeezes before they hit headlines. Think about yesterday. Small investors triggered a domino effect. Each forced buy pushed the stock higher, crushing shorts. The result? A 40% gain in a single day. But here's the problem. Many joined too late and missed the move entirely. Now look closer. The signs were there. Unusually high short interest. Sudden volume spikes, subtle news catalysts. Combine them and you could have predicted the move. Most people ignore pre-market activity. But that's exactly where the first hints appear. You don't need millions to profit. You need awareness, timing, and a calm mind. That's how retail investors beat Wall Street shorts. Infosys isn't unique. Similar squeezes happen in other ADRs, tech stocks, even smaller companies. The key is knowing what to watch for. Here's a simple way to think about it. Imagine a balloon. Shorts are holding it down, pressure builds. Eventually it pops. Those ready to watch it rise can capture the upside. Now imagine being first to spot it. While everyone else panics, you calmly collect gains. That's the advantage of knowledge and timing. Short squeezes test psychology as much as numbers. Shorts panic, momentum builds, and profits follow insight, not luck. The next time Infosys or any similar ADR moves, will you recognize it or miss another 40% spike? Let's break it down further. Yesterday, volume spiked early. Shorts were forced to buy, pushing the stock even higher. Every minute that passed, the pressure grew. This chain reaction is what traders call a short squeeze, and timing is everything. Most retail investors watch the news, but the news is always late. Those who focus on pre-market signals, unusual volume, and short interest data catch the move first. That's the real advantage. Think of it like traffic. Everyone sees the jam too late. You notice a bottleneck forming, take an alternate route, and arrive first. The market works the same way. And here's a tip most people miss. The first wave of buying is often small, almost invisible. But once momentum builds, the squeeze becomes explosive. Recognizing the early wave is what separates winners from spectators. Yesterday, retail investors who noticed this early wave were able to ride it from the very start. Shorts scrambled, buying back positions at higher prices, and the stock shot up 40% in hours. That's why being observant matters. Market psychology, timing, and patterns beat luck every time. Here's another way to see it. Picture a spring being compressed. The more pressure applied, the more energy stored. Release it, and it shoots upward, just like the ADR in a short squeeze. Now, what if you were one of those retail investors? Calm, observant, spotting patterns while the shorts panic? That's not hypothetical. It's the opportunity that happens every time a short squeeze forms. Most investors miss it because they wait for news. Don't be them. Focus on signals, watch volume, track short interest, and anticipate the squeeze. Infosys just proved it. Markets can move 40% in a single day. And while Wall Street shorts panic, retail investors who stay alert can profit. Spot the shorts, watch the pressure, and ride the squeeze. Remember this: profits follow insight, not luck. Markets move fast. Stay alert, follow patterns, and the next massive spike could be yours to ride. Earlier, I mentioned how short squeezes connect to sudden foreign buying pressure. But if you don't understand India-US trade dynamics, then even the best ADR analysis won't help you. So watch this next video where I'll show you how to India-US. Deal Phase 1. The hidden clause nobody noticed.